Good evening, I'm Giuseppe Basile. I'm the Essentially. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the fibstalker nickname. Good evening. Today is May 18th. It's 8 p.m. time in Toronto, and this is the first of the three videos I'm going to provide and offer as a review of today. This is the weekly review. And in this video I'm going to review for you the euro dollar versus US dollar, the S&P500 mini futures, the dollar index futures, and gold mini futures. So let's start from the daily chart of the euro dollar, which is what you see on the screen. In these reviews I like to look at the weekly time frame first, and I want to show you where we are in this market. And if we zoom out, we can identify this 121.25 level, which is the area of support identified from tracing from the lows in 2000s to highs in 2008 here. And as you can see, this level was tested twice. The market, after testing this level in July last year, when Mario Draghi came in the news, saying that he would do whatever it takes to save the euros, then started this move higher in the euros. February 2013 we were able to time this 128.80, and eventually this level was tested 3 times and brought price into tried to bring price into the first target here. At the same time, there was another level that is very important, is watched by banks and other institutions and program trading too, and that was the 138.37. So this is a sell signal for longs typically. So this market has been fighting between this sell signal here and the push from program trading to hit the first target, this 141 level. Price didn't make there so far, and from the development we saw, and I'm going to show you on the daily time frame, I can show you that probably price is not going to get to 141, and the reason for that is you will remember that in February, beginning of April, we had a trace. We had already a trace during March, and this was from highs to highs, and market came into this area of support 137.21, and we saw participation on the upside here at this 137.21. Price never broke this 136.63 here, and eventually continued higher. We had a measure move higher here, which held, was tested 3 times, but eventually price was brought into the first target, which is previous highs as well, and then the market reversed. When the market reversed, what happened, and this happened on Thursday last week, we saw this 136.64 level being pierced. So to me now, this market is quite in a good shape to actually retest the all the way halfway back here, and this is still a long at the moment for the euro. If we look at the previous history now, the next level of support, which for me has only the potential to provide a bounce, is going to be 133.72. So what can happen in this market then going forward? I think we are for us. So I can remove this level now. This level area of support is not meaningful anymore. I think we are for a small dead cat bounce here, and there is the possibility for this market to test again the 137.80 area here. However, we are going to study the sequence of measure move on the 4-hour and 15 minutes here to see when there is the failure, because when there is the failure, this market is, in my opinion, going to start its move lower again, and this is a potential level of resistance, the 137.78. This is an extension short, And when we study the 4-hour chart, we see that at the moment this market is respecting a measure move long when we trace from highs to highs, and this 136.87 has held. So there is still the possibility for this market then to continue higher, and it will come eventually into this level of resistance that we showed before. And as you can see at the moment, this level of resistance lines up with 137.77. So that's where we could see this market moving going forward. Moving to the S&P500, there is no news in this market. Actually, this market tried last week to break above this this important level 1882, 1884 here. This is the first target of this busted setup that we saw at the beginning of February. Price went below 1735 on the March contract, and then was pushed higher on the smaller time frame, and eventually reached this 182 when it was tested a number of times here. So there is the possibility now for this market to just come back into the all the way halfway back here from highs to lows, and we might still be seeing our resistance here in this 1878. And even if this market continues higher and breaks the red line here, it's not very easy to see, but this is 1883.60. There is a possibility for this market to just turn as profit taking comes in again. So this has been a very long period of distribution here, so should be very careful with new longs in my opinion. And when we look at the 4-hour time frame, the level that the area of resistance that you have to keep in mind starts again at 178.80 here, and we can see that the sequence of measured move has already failed here on the 4-hour time frame, which means that this market could actually reverse from here, and it could be a very brisk reversal here. So we have to be very, very careful, and it's also important to study the 15 minutes chart here, and maybe starting from Friday moves here, we saw an extension long, and so the next measured move would be from highs to highs here. So if price moves below 1872.75 here, there could be a brisk move lower. But remember that the SP500, the mini, likes to retrace a lot, and there is still the potential for this market to get into this 187.75 level. So we will see what happens. Keep an eye on this 1873, 1872, 75 level. Moving to the dollar versus the the dollar index. This is just the dollar index. So on the weekly time frame here, we can see this important level, the 85 level, that has been a level of resistance for a couple of years now, and from when it trades from highs to lows, we see 85 being tested 3 times in 2012, 2 times in 2013. And of course, the implication of this area of resistance is that this would push price lower into the 74 area. However, we also have a measure move long. Of course, there is always the other side of the trade, and this measure move long, although it had participation a number of times here, eventually broke and was never able to bring price into this OETC 86.13 level. So what I can take from it is that longs were not able to push price higher. However, when we study what happened on the daily time frame here, we see that things are quite different, because besides what we saw on the euro dollar, which is actually the inverted, the opposite of the dollar index, we had this sequence of measured moves here, and the sequence of measured move now has been interrupted, and we can see this we can see this clearly, because we had this level of resistance. Price never went to the first target, and the next sequence held and brought price, was not able to bring price into target. So the inner moves though had a violation of the sequence, as we can see here. This sequence held, bringing price from 80.08 into the first target. So let me remove the other. So I'll remove the previous one, because this is still somehow active at the moment. And but the next sequence in the next measured move in the sequence actually failed, as we can see here. So this was an indication then the shorts were not able to keep pushing price of the dollar index lower, and there was this reaction higher, which eventually broke the equivalent in the euro dollar, and the equivalent on the dollar index is this trace here. So we saw price moving above this 80.07. So what can happen now? If we look at price action, this is an extension long. So a way to model this move higher is to take the high to highs and actually look at exactly the opposite of what's happening in the euro dollar at the moment. So this is what I'm going to look at in this market, but looking at the euro dollar will give a better indication also, because the euro dollar is more liquid and there is more program trading on it. Moving to the to gold here, I want to show that gold, likewise the euro, it's on top of a long-term support level here, and actually this comes from a low in 2002 to highs, and this is this area that has been tested twice. And when we get into when we zoom into this weekly time frame here, we also see that the highs to highs provide support a number of times here, which allows us to to study this market on the daily time frame here. And when we look at the daily, we see that there are a number of retests, 4, 5, 6, and now 7 tests of this area. So this area is not going to give up very easily here, and so this allows and entitles us to use the fib stalking technique here to understand when this market, and if this market actually can actually continue lower or see a bounce here. Of course, we need to study the sequence of measured move, and we have a sequence here. It's not clean, it's a little bit dirty, but still it's there, and I cannot see. One could make the case that this sequence has been violated. So as soon as this market will be brought into this 1286 again, we could see a reaction higher, and if that happens, I would anyway use as a confirmation the highs to whatever lows is going to be printed, and again the entry would be price moving above, in this specific case, 1297 with a stop below the lows that will be printed here. So this would be the way to enter this market. So I'm going to provide this video that usually are reserved to my weekly newsletter, free weekly newsletter. I'm going to share them this week on my website as well, just because I want to showcase my methods in advance of the webinar I'm going to have with FX Trade actually tomorrow morning at 10 at 14 GMT time. So if you are interested, you can go to my website and subscribe for free, and I'll see you there. Thank you very much for your attention. I wish you a very good trading week, and for those in Toronto and Canada, I wish you a great Victoria Day tomorrow. Thank you very much, and bye bye now.